rejected yet again. Is this now the time to exit crypto? Are we starting to see demand disappear for crypto and altcoins? We got to break down exactly what is going on. And I'm sensing a lot of frustration and a lot of fear in this market, and getting a lot of messages around, guys, we're getting this rate cut, but why are we dumping? Why can Bitcoin not create higher highs? And why do we continue to consolidate? I'm going to break that down and a lot more. If you appreciate these TA updates, smash all the likes. Do not forget to subscribe. If you actively want to trade with me in our community, jarscrypto.com/TG. The link is in the description. Guys, we've been forming a very, very important consolidation pattern here on Bitcoin. There's no denying the fact that since this period in early March, we've been in a multi-month consolidation pattern, a bullish consolidation pattern. We've been calling the updates through this pattern quite accurately. And we spoke a couple of days just over a week ago, about this dump, right? We created an M pattern and we dumped. Fine, no problem. We bought the dip here. I said I'm going to buy the dip at these yellow dots, and I did. And we started bouncing and working our way. And what did I say at the time? I said we must reclaim this important level. The neckline of the M pattern, which failed to hold a support, was very likely to act as resistance. We got a fake out to the upside, liquidated those overzealous longs, and we just came falling straight back. So this level is a confirmed resistance there along this 63.5 to 64K level. So now Bitcoin is struggling. Now, why is this a concern? Well, think about it. We're in this consolidation pattern, and the more time you spend at the bottom of the consolidation pattern, the higher the chances you break to the downside. Now, yes, this is a bullish pattern, but if you keep threatening, spending more and more time at the bottom of this pattern, there's a likelihood you just fall to the downside, right? So it's important that Bitcoin gets above the red area and starts working to the top of the pattern so that we have a chance to break to the upside. Now, when we zoom out, is this a time to worry? Well, there's a few things we need to cover off. First and foremost, what is the backdrop? The backdrop right now is that we're expecting a Fed rate cut in 2 weeks, 5 days time, right? September the 18th, we're getting this Fed meeting. Everybody's expecting the pivot. Jerome Powell's all but confirmed it, and we expect at least 25 base point rate cut. In fact, 32% of the market expect a double rate cut. So then why are we not seeing green? Well, we are, you just have to know where to look, right? Because if you jump on over to the traditional market, stocks continue to rise, right? S&P is aiming for a fourth straight winning month. So you need to understand what's going on here. We are rotating from a monetary tightening cycle to one of loosening. And naturally, when that happens, risk rotates on. But what are we going to see, guys? What are we going to see? Remember, we said that because of the situation that's happening around the ETFs, we are getting a different clientele that are investing in crypto. If we went into the previous cycle, when a bull market ensued, it was just retail investors, right? There was no institutions buying through ETFs. It just wasn't there. It wasn't BlackRock, it wasn't Fidelity, it wasn't Wisdom Tree, it wasn't ARK, it was none of these ETFs there for anybody institutionally to do anything. But now a lot of the Bitcoin supply that we have is through institutions buying up. So naturally, we have to understand that when there's certain things that are going on in the macro economy, we have to remember it's not just retail traders like you and I that own Bitcoin, it's also institutions. And institutions behave differently from us. Institutions will look for more guaranteed returns versus the riskier returns. They only come out of the risk curve when they're struggling to find yield, right? A return. So, picture this. You're about to cut interest rates and you expect the S&P and the NASDAQ to do really, really well. You're expecting growth stocks to do well. You're expecting tech companies to do well. Why are you going to be invested in Bitcoin? Why are you going to be invested in Ethereum? They're going to take the easier green that they're expecting to see in a bull market in the traditional market. And naturally, this is going to weigh down on us a little bit as well. So it's important to understand the outflows we are currently seeing, and there's some evidence. There's a good article on this on CoinDesk. Highly suggest you go read it. It's the first one on the page today, showing that the inflows through places like Coinbase through retail traders is actually quite strong. It's more the ETFs that is seeing the outflows, and we did see some outflows in the BlackRock ETF as well. So that's one for you guys to watch, is to remember that there's two different types of people and there's no need to panic. That being said, is now the time to exit? Should I be worried and should I be getting for lower prices and panicking out of this market? Let's cover it off. Let's take a look at what we're seeing in this market. Fundamentally, we have been rejected by that level. We spoke about it. But when I zoom out, I can't help but understand and see that we're moving into our EMA ribbon. right? And we've got some important support here by the EMA ribbon. Already you're seeing some support around here at 58, but really the EMA ribbon goes all the way down to the bottom of this channel, which is 53,000. And for me, this 53,000 dot here is going to symbolize the very important bit. This is the bit I want to be focused on here in terms of, can we hold this level? If we lose 53,000, not only do we lose our EMA ribbon here on the weekly chart, but also we've broken down from this consolidation pattern, right? At that point, this consolidation pattern is broken out and we need to get ready for some lower price targets, such as, for example, this 45 level to see if we can hold support at 45, right? So for me, the first point to call is that 53 level. Up until that 53 level, I'm not too bothered. Everything remains the same as it has since March. Since March, we have been in a bullish continuation pattern. No matter what you say, that is objectively correct, right? We are in this pattern. If we lose 53, not only do we lose our EMA ribbon, we lose the bullish continuation pattern, and we're going to have to reevaluate. Support comes in a little bit here, right? You can see that little support. Let me just zoom down to the daily chart so you guys can see that. There you go. See this little cluster here where we were chilling for a week or so here before a big move to the upside? This is important support as well, okay? So 50,000 is some support there, and then you've got your 45,000 level further down. Those are the levels we're going to have to rely on if we break down from this pattern. So for me, I like the dips here. I'm happy as long as we stay within structure. These are great opportunities for me personally. I can't tell you guys what to do, to buy the dip within a bullish structure. Not even a neutral structure. It's a bullish structure. It's a long consolidation at the top of a bullish move. And for me, fundamentally, there is no way I'm getting shaken out this market. Yes, the traditional market may do well first. Yes, the S&P and NASDAQ could do well. By the way, I've got separate investments in those, so I'm not too bothered. But in terms of my crypto portfolio, I know that time's going to come. I know the interest rate cut will take an effect on crypto. I know that crypto historically is at a powerful Q4. I'm not going to panic out now and sit on the sidelines, even if we do get more of a pullback. I think we're going to get one more flush out. I think September could be that time where we get a bit of buy the rumor, sell the event, right? Maybe we get something like a bit of a dump leading up to FOMC meeting. Maybe there's going to be some sort of catalyst which drives prices down towards that 50,000 level. Maybe we're wicking below 50,000. And I'm not going to panic in those moments. Because one thing I've learned through being in crypto and just investing for a very long time is that markets move when you least expect it. They will try to frighten everybody, make everybody bored and frustrated and scared. Two tactics. One, they make you scared, but some people don't get scared, they just get bored. And a consolidation pattern like this makes the average person really, really bored. Why? Because the average person wants to get rich quick. And they know that. Institutions know that. Really wealthy people know that. And so guess what? They move sideways for 4, 5, 6 months. Wait for you to be like, oh my God, it's not doing anything. And why? And you're prodding the cat. And then boom, when you sell, in a week or two, it's pumping up towards 100,000. And that's how quick it can happen, guys. Just like this move took you from that 40,000, 50,000 up quickly towards 75. That's a big move, right? From 40, 50,000, boom, up to 75. And even if we zoom out a little bit more, it wasn't long ago when we were sitting at 15,500. We were down at some low prices. Okay? So this market will move quickly and powerfully just when you panic out. So don't be that person that panics out. Stick to your conviction. If you want to hold crypto for this next cycle, make that decision and just sit on that decision. Why do you have to be in, out, trading your long-term bags? One of the biggest mistakes I see amateurs making is they trade their long-term bags and they hold their trading bags. Keep them separate, guys. If you're trading, have your stop loss, have your take profit like we do in our Telegram community, and we stick to it religiously. But then equally, if you're investing, invest for the long period. Know what time horizon you're investing for. When are you going to trim profits? When are you going to DCA? What's your strategy? And stick to it. Hopefully you found this useful, guys. If you appreciate this type of content, smash up the likes. Do not forget to subscribe, and I'll see you in the next one.